Good afternoon, everyone. My name is Jonathan Howard. I'd like to welcome you to our special webinar event on how to catch super stocks with MarketSmith. Before we begin, I'd like to introduce our sponsor. The company's name is Simpler Options, and their CEO, chairman, and primary content provider, his name is John Carter. Welcome, John.
Jonathan, thanks so much. I'll just take a couple of minutes because I actually want to dive right in and see the presentation on MarketSmith as well, which is a tool that I use, and you can actually go ahead and go to the next slide there. And we can even go to the next slide. I'm going to talk real quick about how to using options to trade big stock moves, just so you know a little bit about me. I've been doing this for 25 years. It took me about 8 years to figure out how to kind of really time kind of catching the big moves in stocks. And by the way, these are stocks, I grew up on IBD. These are all stocks that I find using IBD tools. I just also fell in love with options, and so I like to match IBD and MarketSmith's research and filters with specific option strategies. So, and I wrote about that in Mastering the Trade. So my goal with all of this is catching big multi-month moves on stocks, which is one of my favorite ways to do this. And the reason I like this is, one, I'm not having to stare at charts all day. I've got 3 young kids. They like to see me during the day, as does my spouse. But there's an advantage in not staring at the charts all day. Then you don't get shaken out. You don't get psychologically manipulated by high-frequency trading and all that kind of stuff. You're catching the big move. You're catching the meat. And the pricing on the right stock is clean. It's all based on the future growth of the company. And the other thing I love about these kind of stocks, the stocks that are pinpointed in these high growth areas that you can find with these filters with MarketSmith, is that oftentimes they don't actually really care what the overall market is doing. And, you know, yes, of course, if the stock market is going down a lot of stocks are going to go down with it. But I've found that a lot of these stocks will actually kind of do their own thing and even continue to rise no matter what the market is doing, which I like. And we can go on to the next slide. And so that's what I found, is that the right stocks will typically just kind of outperform the general market, sometimes in a very big way, which is just something that I find that's very useful. An example of this, and this is a stock that I like to trade, is Dollar Tree. And this is one that I found using the tools. But instead of, say, buying the stock in 2009 at $20 and holding it now, what I like to do is go in and kind of look for these spurts of growth. And you'll notice that there'll be times where over a quarter or 2 quarters, the price movement is flat. And then there'll be other times when there's this big spurt of movement. And that's when options, when they're well-timed and you get the right option, work really, really well. And that's some of the stuff that I like to use. And we can go on to the next slide. And, you know, it took me a long time to kind of figure that out, because the first couple of times I would do this, I would buy options and I'd be right on the stock. You know, the research would be spot on, but I wouldn't make money, and that was frustrating. Like, the options would just, you know, what I found out, they just weren't the right ones. So the key here is to be able to time the move and to use the right options. Because if timed incorrectly, the options will typically be overpriced, meaning you could be right on the stock movement and still lose money on the option. Very frustrating. So we'll go on to the next slide here. So what I found, though, is that by utilizing options, a lot of times I'll even buy the stock, you know, say buy 1,000 shares of Dollar Tree, and I'll hold on to that through the entire move as much as I can, but then I can go in with options and kind of time it and get a little additional kicker during those bigger moves, which is nice. So if you understand and are aware of timing and buying these options correctly, you can use options to catch shorter-term price bursts. Okay, capitalizing on the power of leverage, and that's great. But the other thing is you can create extra income by selling options at the right time on the stocks you own, also known as kind of covered calls. Now, the problem with covered calls is that if you sell it at the wrong time, you can end up getting taken out of a great stock, which you don't want to have happen. So you want to time that as well. And then also you can lock in gains without having to set stops on your stocks that get picked off. And we can go to the next slide, which is great, especially in the era today of high-frequency traders that literally write algorithms to hunt for stocks. If you can use options to kind of, you know, take the problem of that away, instead of having a hard stop in the market after a nice run, you can just utilize some options, and then that way the high-frequency traders can't even take your stop out because you don't have a stop in the market because you're hedged with options, which is great. So I've been doing this for a long time. All the lessons that I've learned in trading options, I've learned the hard way, which unfortunately is the best way to do it. So hopefully I can save you guys, if you're interested in this, a lot of the heartache that comes from trying to figure that out on your own. What I've found is that big growth stocks offer the greatest options trading opportunities in the market today, as long as you know what you're doing. If you've got a great tool like MarketSmith, that is the first step, and then from there, you just need to learn how to time the options with that research. You need to know which options to buy, which expiration to use, so you're not doing something where you're right on the stock but losing money on the option. So I recently did at our company a 4-hour class that shows you exactly how to time these trades and exactly what options to buy and when, just essentially using some specific technical signals that you can match with the research that you get from IBD and MarketSmith. Now, we did this class for $497, but for the next 24 hours, just as a favor to everybody that's at IBD, everybody that's at MarketSmith, you can sign up and get the actual class in its entirety for free. If you just go to simpleroptions.com/secrets, it'll take you to a page, just put in your info, and then you have immediate access to the class. It'll actually be a good complement to the webinar that's going on tonight. So that's what I got. Jonathan, thank you again, and looking forward to the presentation from Scott and Rusha on MarketSmith.
Thank you, John. Once again, that website is simpleroptions.com/secrets to take advantage of that special offer. Now on to the main presentation. I'd like to introduce our two speakers from MarketSmith. They are both product coaches, Arusha Paris and Scott St. Clair. Welcome, gentlemen.
Hey, thanks, Jonathan. It's great to be here.
Thanks, Jonathan.
What we're going to cover is who MarketSmith is, we'll define what a superstock is, and more importantly, tell you how to find these superstocks with MarketSmith. We'll look at two of many powerful analytical tools, and we'll also give you a preview of some upcoming exciting new features. So to get started, Arusha, walk us through who MarketSmith is.
Okay. Well, like Investors Business Daily, we were founded by William J. O'Neill. And we are an online stock research platform, and the key is we're used by both professional and retail investors. And our mission is to empower investors to take control of their investing life. Now, Scott and I, we were both customers for years of this product. And over the years, we have empowered ourselves to take control. We make the decisions on our own, we make the mistakes on our own, and we keep getting better at it. So this mission we completely believe in at MarketSmith, and everyone at MarketSmith believes in this mission. Now, our history, we started out with the Daily Graphs print books, the blue-green books. I'm sure a number of you on the webinars recognize these books. Scott, you definitely recognize these books. You were a long-time customer of it.
I do. I used to get those books every Saturday. It was like Christmas every Saturday to get those books. Remember, you couldn't get them online.
Right.
And I still have some of those books I saved from the 90s, to kind of remember those previous years and some of that old data.
Yeah, and the books, they gave a tremendous edge to the subscribers, right? You had all these charts, you had the fundamentals right there, and those who subscribed had this amazing edge on the market to find the next great stock. Now, in '98, we were one of the first companies to launch charts on the internet, too. Okay, so we're always on the cutting edge here. 2010, we went to MarketSmith, and so we launched and integrated all those Daily Graphs online products into one research tool. Okay, so we rebranded our name as MarketSmith, and then 2011, we released our mobile apps to make it even easier to stay on top of the market. Now, the next big news is July 1st, we finally did what was a long time coming. Okay, we finally united with Investors Business Daily. And now we have this great premium suite of investing products. And the great news is that together we're going to be able to bring you new and innovative research product, which will continue our mission of helping all of us make more money in the market. But now the big question is, why are we here today? Right? And it's hopefully it's pretty obvious here. We want to capture those next great super stocks. Now, think back to 2010. Think back, imagine capturing Chipotle out of this cup with handle. Imagine capturing a bunch of this 185% gain in 8 months. This is a super stock. We go to the next one. Here's Netflix. Imagine capturing some of this run. Okay, before it went on this huge move, imagine just going and capturing some of that 382% gain. Or Facebook, a more recent example in 2013. Being there at the right time, having that good position and really capitalizing on what they were doing. Or finally, imagine predicting that electric cars were going to work. Who actually knew electric cars were going to work, or Elon Musk was going to pull it off? Wall Street knew. And we saw it on the chart that Wall Street was placing a big bet on Tesla. But the reality is that too often we discover these stocks too late. A lot of times we're going to miss the breakouts, and the sad thing is we end up chasing and buying these stocks incorrectly, right? And of course, looking back, you always knew it was going to be a big winner, but the difference is, and the reality is that we didn't have a plan in place to know when to get into the stock at the right time and when to get out. But the great news is that MarketSmith has been designed to capture these kind of stocks. Now, this is over 50 years of research. Okay, so we have an internal portfolio manager team that is selected by William J. O'Neill himself. And in addition to looking for these super stocks and studying previous super stocks, they are constantly building screens and tools to identify these stocks even easier.
Arusha, that's how almost all our products developed, right? The paper, was something, Bill says, hey, I want data that shows this, right? So they build it for Bill, and eventually it morphs, through the years, obviously, into a paper. And all of the tools in-house here are tools that we use in-house, and like you and myself, we used before we came here.
Right, absolutely. And we continue that with MarketSmith. We're always thinking of different ways to come up with cool new features to make it easier. Now, and as a result, all these tools, they give our internal portfolio managers an edge on the market and our subscribers an edge.
Let's go back to Chipotle back in 2010. We talked about this 185% run. Now, how do subscribers at MarketSmith, I know they're asking this question, how did they know, what tools did you provide to show them that this stock had the potential to move at that time?
Yeah, it's amazing, Jonathan. During that time, and we were both here, Scott and I were both here, Chipotle came up in 10 different ways on our screens and over the time. So let's go to a daily chart of Chipotle. And so now, just to put in perspective here, the market was in correction. This is during the summer. Chipotle's already gone on this really nice run, and we don't know at this point whether the run is over, right? How far can a burrito stock really go? But it just kept coming up on a number of our screens and kept coming up and kept telling us, pay attention to Chipotle. Now, the first one was accelerating sales screen.
And Arusha and I, when we first came here, we used to go to Chipotle all the time for lunch, right?
Right.
And the one we went to actually opened at 10:30, and we would get there like at 10:30. Well, we start early, so we'd eat an early lunch, right? But you could almost feel the accelerating sales because we were in such a hurry to beat the rush. Because if we went there at 11 or 11:30, we'd always say, well, we can't go to Chipotle. The line's too long.
Yeah, so every day, we would recognize people in the lines all the time, too. So yeah, those sales, it resulted in these sales kept getting better and better and coming up on the accelerating sales screen. Now, the second one was our relative strength screen. Now, a lot of times that initial one, we might miss it, but we're not going to miss it coming up on this relative strength screen. We are going to start seeing the stocks that are outperforming the market. So we've kept seeing Chipotle come through this.
So here, on this big day, when Chipotle's having a really great day, it's up over 9%, and the volume is up threefold. It was on the Up on Volume screen, which is one of our pre-built screens we'll show you a little bit later. This is a very easy screen to run, especially when the market's open, and just show me all the stocks that are up on volume that day, where the volume is above normal and the stock is up at least 1%. So if we were to go back to this day, you would have found Chipotle in your list of ideas.
Right, and now the fourth reason was because this was an earnings gap, right? This was an earnings reaction. And so if you're paying attention to earnings, you notice that, hey, Wall Street is still optimistic about Chipotle.
Now here, this looks like a breakout from a double bottom. Is that what you guys are seeing?
Well, the next one, Jonathan, is the fifth one is our pattern recognition algorithm. And to the untrained eye, like yourself, Jonathan, an untrained eye, that does look like a double bottom. And, and that's what's so great about the pattern rec, because it does the math for you. It's not a double bottom because it's not long enough. It doesn't fit the parameters. But you can see our algorithm is starting to draw, in this case, a potential cup. And this algorithm will work in real time. It's really neat that as Chipotle builds this base, if it were to draw a handle or build a handle, the pattern rec would adjust. It'd say, wait a second, this is a cup with handle and it'd draw a new pivot. Or if it started to break down and never broke out, well, then the pattern recognition would just turn off. There's no pattern here. So this would be number 5 on the way you would come up with this idea in this case is our algorithm.
Now we jump out a few weeks later, and you can see that pattern recognition continuing to develop, and now it's picking up a handle. You see that beautiful sloping handle there, and you see pattern recognition recognizes it. And in addition, it picks up what we call the blue dot. Now what this is telling us is that relative strength line, that blue line, is going into new highs, meaning that this stock is becoming more of a leader in the market. Now remember, this whole market was in a correction at this point. So most of the stocks are going down, but Chipotle is going sideways and resisting the downtrend the best.
Here's the 7th reason, which is relative strength. So one of the screens you can run is just something as simple as relative strength line in new high ground. And in a market correction, this is easily the best screen. So you're seeing the stocks that are resisting the downtrend. So maybe they're just going sideways, but if they're going sideways while the market is going down, that relative strength line is going to start to go up, eventually making new highs, and they'll show up in your list of ideas. With a simple screen, the relative strength line new high screen is very simple. You just choose yes. Show me all the stocks that are doing this, and in a correction, it might only be 20 or 30 ideas, but they're going to be quality ideas.
Now we jump out another week later, and this is September 1st. Now the stock is actually breaking out, and here it is coming through the up on volume screen again. Okay, so a powerful breakout, and it finishes at the top of the range. It's up 5.69% on that day, and so this is exactly what you want to see when a leading stock as it's breaking out.
So this is interesting. I remember this day because I'd only been at MarketSmith for, I would say, a couple of weeks at this point, maybe a month. But when it was breaking out, this was what turned out to be a follow-through day, right? And you'd never know it's going to be a follow-through day, but you usually get a feel like, wait a second, this feels very powerful. There's stocks breaking out, and here's a stock breaking out of a base on a follow-through day. And you'd already had all these lists, like it had shown up a number of times, but I remember Scott O'Neill, who is a portfolio manager in-house here, he'd come out of his office in the middle of the day and he says, meaning the portfolio manager, we're buying Chipotle here. And I remember thinking, the market, I was a little bit skeptical, but it gave me that push that I felt like I was being left out. If all the portfolio managers were buying, I know that it kind of gave us, all the guys in-house here who trade for themselves, who use this product, that kind of push over the edge to go ahead and go with this trade at that time.
Yeah, I know for a fact that everyone in MarketSmith at that time, they were all buying Chipotle right on, because it was a picture-perfect kind of breakout. It was almost too perfect.
And how it would have shown up, and the 10th reason in this case is our stocks breaking out report. So you can get an email alert of stocks breaking out as well as just see those stocks in a list inside MarketSmith. So on this day, I guess if I were to, there's three signals, right? There was the up on volume, the breaking out today, and then the RS line new highs. So right. If you ran all of those or any of those 3 screens, you would have been aware of Chipotle as it was breaking out.
Yeah, now if you missed those other 9 signals, right, this is the easiest one that you could go to, the breaking out today report. You can set alerts on it. We'll talk more about this later, but this makes it really easy. But there are all these signals beforehand that you can get, see Chipotle as a potential super stock and prepare for that potential breakout. And here you can see there's that original breakout, and in 65 days, it's up 63%. Okay, so this is what we expect from a super stock. A lot of the best stocks, once the market gets going and these super stocks break out, they're going to give you one chance to get into them, and then they're just going to leave you behind. You're waiting for that pullback, but that pullback never comes.
speaking of super stocks, why don't you step back for a second and talk to us or define what we think a super stock is?
Well, my favorite way to describe a super stock, I'm going to steal right from Bill O'Neill, where he says he's looking for companies, in essence stocks as well, that they're changing the way we work, live, or play. That's a great thing to, when I look at analyze a stock, I often think that in my head, is this company doing one of those three things? So they're game changers in the field. And if they're changing the way we work, live, or play, in essence, like Chipotle, it changed the way I did lunch.
Right.
Because Arusha and I did lunch there like 3 or 4 days a week for a long time. Tesla, for example, which we'll deliver or go over later, hopefully someday that's going to change the way I drive to work because I want one of those cars, right? So this is the demand and the excitement of the products they develop, and what that does is what? What does it lead to, right? Big earnings and sales, right? So the stock, like Bill says, the stock's not going to go up just because the chart looks great, right? It's going to go up because of big earnings and sales, and those big earnings and sales do what?
They're going to attract the institutions, and the institutions are responsible for 80% of the stocks that move in the market, okay? So we always want the institutions on our side, and we want to always figure out what the institutions are doing, and this is one way that we're going to look for it. A great story, great fundamentals, and then finally a great pattern telling us when to get in.
Okay, so we saw the power of Chipotle, and they gave us 10 reasons before the stock even broke out. Let's walk through each one of the 4 super stock identifiers individually and explain to the audience how they're used and what they mean.
So what we're going to go over now is so the 4 stocks, super stock identifiers that we'll go over are the preset custom screens, our proprietary pattern recognition algorithm, the breakaway gap, which we just released a few months ago, and then finally the blue dot, that relative strength line hitting a new high. So Scott, do you want to take over the preset screens?
Sure, I'll talk about the screens because I really like the screens. Now, MarketSmith can be customized, so if you want to really dig in deep and you have something specific you want to search for in our database, you have access to it. It's really neat, the custom screener. But we do a lot of the work for you to make it easy. So some of our preset custom screens, if you follow the investing philosophy of William O'Neill, we got a screen. Just click on his name and whatever number of stocks will show up in a list. The market's open. It's a strong day. You want to see which stocks are acting really well, click on the up on volume screen. We talked about earnings and sales, right, how important they are to what could be of the potential super stocks. Well, we have screens for those as well. And then the N in Cancelim is new, right, IPO growth screen.
Yeah, now what's cool about this IPO growth screen is that Steve Birch, who's the president of William O'Neill and Company, he personally designed the screen himself and shared it with the community. So he did that. He did a webinar that you can go back and watch. And I watch that every few months because he's been doing this for 20-plus years, and he's really gotten it down, and he's really figured out a way to identify these super stocks nice and early.
Again, the in-house professionals like Steve are using these tools, to find ideas.
Now, the preset, here's a screenshot of our MarketSmith stock screens. So this is a folder right in the screener. And so the nice thing about MarketSmith is that it gives you complete access to the O'Neill database. And so the bottom line is that we have a lot of different types of investors who use the MarketSmith product. So it's not just growth investors. We have value investors who use the Warren Buffett and Benjamin Graham screen to find stocks that fit their style. Now, if you're interested in growth at a reasonable price, you can click on the Peter Lynch screen and see stocks in that way. Or if you're interested in shorting even, the down on volume screen. Just click on that. Now you're going to get all the stocks that are moving down on pretty good volume today.
Let's look at a couple of examples of stocks, recent examples of stocks that were captured using these screens.
So, Jonathan, here's Lululemon. Let's go back. I think this is around
2009, 2010. Yeah.
Thank you, Rusha. And so we see Lululemon's broken out at this point. It's come out of this double bottom. But how do we find those ideas before they break out, right? That's one thing that I hear over and over and over. I want to find the ideas. I want to watch the stocks before they break out. Well, before the stock broke out, it was on the accelerating earnings screen. It was on the accelerating sales screen. Just those two alone should be enough to get a stock on a watch list. If they have accelerating earnings and sales, that's everything in the stock market on the fundamental side. The IPO screen, so it's a newer name at this time, and then our bread and butter preset screen, the William O'Neill screen. You can see as it came out of the space, it chopped around for a little bit with a couple of small pullbacks, but ultimately probably on earnings there later in December. You have a huge move, and the stock's up 69% in 68 days, and we're really trying to capture hey, it'd be great if we could capture all of that, but to capture a portion of that is really our objective. Another name, Ambarella. Okay, so I remember when Ambarella showed up in my screens, I didn't know what they did, right? Now we look back and we think, oh, well, they make the chips for GoPro. But at this point, when they've gone public, that wasn't so obvious to everybody. So this is how you're going to find new names, by screening and finding these. Accelerating sales, check, shows up on that screen. The IPO screen, again, it's a newer name, and the relative strength screen. So the relative strength is strong. It's probably at this point, the high 80s. Now, we also have the algorithm, which helps you to find out. So we've got the fundamentals that tell us what to buy, right? And then the algorithm is going to help us to time our buy correctly. Ambarella is building a double bottom there, and built like a bit of a double bottom handle, ultimately breaking out. And it's a huge move, 100%. Eventually, it built another base in the 30s right here and went on to triple from there. So even if you had missed it and was still staying on top of them, these are ideas you're going to find early and be there, aware of the stocks that could be potential super stocks.
Yeah, Ambarella, this is a classic super stock move right here. It just keeps fighting the trend, and then it really accelerates. More and more people realize the great things that they're doing and how well the GoPro products are selling, and more institutions had to get into it.
And the key for our audience here is we catch them before they're well known. That's the big thing. Everyone knows about Ambarella now, and of course that was going to be super stock. But if you were a subscriber to MarketSmith and you saw all the screens, you would have known about it early and got in early, and that's the key.
Now let's talk about the pattern recognition algorithm because we're pretty proud of this. But first, let's go into the chart patterns because this is where it's at. Now remember, I mentioned earlier that institutions are responsible for 80% of a stock move. And so we're going to do everything we can to try to figure out what these institutions are doing. What stocks do they like? And one way we do that is by identifying chart patterns. Okay, so Bill O'Neill, he went back and he identified these classic patterns. And what we've seen is that these patterns will precede major moves. Okay, it doesn't necessarily mean that if a stock forms a pattern, a major move is going to happen. You want those fundamentals and story, but the pattern is going to tell us when to get into the stock. Now, another huge thing is that it allows us to manage our risk. If the stock doesn't go in our favor, we're going to get out of the stock. So it sets a rule of expectations. It gives us some structure so we know what to expect when the stock breaks out.
And our MarketSmith guys are being nice here. Anyone who's searched for chart patterns and done the work knows this is incredibly labor-intensive and incredibly time-consuming. It's probably the most challenging part of investing. But the beautiful thing is, with the software they're going to describe, all the work is done for you. So let's talk about the algorithm.
Yeah, so you want to talk about time-intensive. This pattern recognition algorithm took 10 years. And so we had to hire PhDs, mathematicians, to go down and break down these patterns that were identified and put it into this computer program, okay? And it analyzes, anytime you put a daily chart, a weekly chart up, it instantly analyzes and picks up these patterns. Okay, so it makes it really easy. Now, Scott, I know both you and I, when we were using the older products and we were looking at the stock books, it took me years, personally, to train my eyes to pick up these patterns. Every time when I started out, everything I saw was a cup with a handle. But really it would take a lot of time to go back and really identify these patterns. Now, the nice thing with this algorithm, it also identifies chart patterns all the way back in our database that goes back to 1963.
And Arusha, I hate to interrupt, but this is a key point because I think this is an underutilized feature in MarketSmith. a lot of times, a lot of you have heard about the model books that they have in-house, and well, how come you don't sell the model books? And everybody, when you come in-house, right, what's the first thing I did? Yeah. Where are the model books? And you rush over to Scott's office, he's got all those model books, and it's like they're shiny.
Exactly.
And you just really want to get into them. Well, here at MarketSmith, it goes back to 63. So you have an online model book. You want to go back and see what Xerox looked like in the late 60s. You can see the patterns that it broke out of. Microsoft and Cisco, and these are names that a lot of people heard, but anything you can think of, as long as it's still in our database, that algorithm goes back and draws them.
And now one other thing to add here is it really takes the next step past the model books, because you can animate it week by week, day by day, and access a simulator. So you can say and train yourself, like, how would I have handled this breakout? Xerox breaking out in 1965, would I have been able to handle those first few pullbacks? Now, the other great thing, we showed this in the Chipotle example before, it's going to pick up those patterns in real time and really give you 3 to 4 weeks. So when I see a right-hand side of a cup starting to form in a stock that I like, I know that I have probably around 3 weeks to do my research, to do my planning, and decide when, if I want to buy the stock, and when it actually breaks out. There's no hesitation at that point. I'm in at that time because I've already done all my preparation well ahead of time.
So here's an example. This looks Facebook, okay? So we'll go through a progression of all the patterns that can be drawn. And the very first one was the consolidation. In essence, the consolidation, Rusha might have mentioned it earlier, is a large price congestion area. So it's not one of the classic patterns, but we want to identify congestion areas where the stock's gone sideways for a number of weeks. So Facebook came out of that pattern, ran up, built a much more traditional cup, and then a cup with handle, and you can see along the way all the patterns, flat bases. If you've read or familiar with Bill's book, How to Make Money in Stocks, all of these terms should ring a bell for you. And then 3 weeks tied even. So if you're looking for the stock after it's broken out to sit quiet, we've got the 3 weeks tight pattern on the weekly chart.
Now, a few other benefits with the pattern recognition, it's going to automatically identify the key characteristics in each base. So when you see a pattern form on MarketSmith, you can hover your mouse over it and get all of this vital information. You can see what base stage count is it in. Now, has it run for a while or not, right? Where's the next pivot? How long is it? The depth. Now, that depth is huge for me because in the past, I would just pull out my calculator, and it'll take me a few minutes to calculate how deep that base is. Now, it's a great time saver. I can just hover my mouse over it, instantly get the depth of the base. Now, in addition to that, now with the breakout days, right, you get instant access, instant information to the price percent change and the volume percent change. Now, this really helps me because I only want to try the most powerful breakouts. If they're kind of on the edge, I usually pass on them, especially in this kind of environment.
And one detail quickly, Arusha, about the volume percent change is MarketSmith will calculate, it is 20 minutes delayed, the volume, but during the day it's going to tell you what the, quote-unquote run rate is.
Yeah, the projected volume, yeah.
So you get an idea of, of course, I don't know what the volume is going to be at the end of the day. Well, you never know for sure, but as the day goes along, our volume percent change will give you a pretty good idea of whether that volume is meeting your parameters.
Yeah, so let's go to an example here. So here's Sanmina Corporation. You can see this big cup with handle. If you hover the mouse over it, now you're going to get all this extra information. So we blew it up here to make it a little bit easier. So here's a stage 1, pivots 2341, length 118 days, and that depth, there you go. That's saving me a huge amount of time right here, 36%. Now with the breakout day, you hover your mouse over that, and it's going to identify when it broke out. Up 9.1%, and that volume there, for me, it's always about volume. 273% volume. The minimum is usually 40 to 50% volume. I want huge volume, so that is massive volume coming into this stock.
On this chart, my eyes are going to the shaded area. There's a green, a blue, and a pink shaded area. What do those mean?
Yeah, no, now this is where you're going to be able to manage your risk and put your plan into place. So that blue area, that's our pivot and buy range. That's 0 to 5% from the pivot. So that's ideally where we're going to try the breakouts to help us manage our risk at that time. Now, obviously, all breakouts aren't going to work, and so we put that little pink area below it, 5 to 8% below, to let you know that, hey, you know what, something might be wrong with the stock. It's not acting like a super stock should. Okay, so maybe it's the time to cut your losses. And then finally, if it starts working, a lot of times when these stocks start working, the last thing you can ever think about is selling, right? So we put that green area up there to just keep you honest and remind you that, hey, it might be time to cash into some profits to take some off the table.
And Arusha, these shares are based on the model books, the history, the studies, right? So you mentioned the stop loss, for example. There's a reason we chose that area. It wasn't just random. It was based on the fact that, when we go back and look at the big stocks, if they went down 7 to 8% or more, breaking out of a base, it was very unlikely. The probabilities were low that they would come back and turn out to be a really big winner. That's why we want to cut our losses in that area.
Let's look at a couple of examples of these chart patterns through time. Here's Walmart.
Here's Walmart at the 80s. Okay, so you pull it up right on MarketSmith. The pattern recognition instantly will identify the patterns that formed. And so you can see these super stocks, they will give you many times, and they'll present many opportunities to get into them. Okay, so we're using the patterns to let us know the next time when the risk is there, the risk is a little bit lower, and when the stock should move up. So here on Walmart, you can see there are like 9 or 10 bases right here. So it keeps giving you an opportunity, and so that's what's nice. A lot of times you might miss that first run, but you keep it on your radar. You see it come up through your relative strength screen or your accelerating sales screen, and it might give you another chance once the market gets ready to go. The next example, here's Qualcomm. Okay, up 2,700% in 52 weeks. Now, what we love about this example is look to the left. Look in 97, look in 1996. Right, you see those consolidations right there? Remember, those are trading ranges. So that's not the ideal type of base that we're going to look for. So what's happened there is that the pattern recognition analyzed it, and it said, you know what, we're just going to keep it as a consolidation. It's not going to qualify for one of our classic patterns. Notice the only pattern, the classic pattern that's on this chart, that cup with handle in 1998. So at that point, there was enough institutional accumulation that gave Qualcomm the power to really run once the market got going. And then a more recent example, Palo Alto Networks, back in 2014, probably the best stock of 2014. It formed this cup and then a flat base, a nice base on base. And once it merged out of that flat base, then it was able to really become a super stock.
Okay, I do see the power of the patterns, but how can I take action? How can I say, what stocks are forming patterns right now?
And Jonathan, again, I'll harp on it because we hear it all the time. People say, how do I find these stocks before they become super stocks, right? So the idea is you need to be, one, you got to be doing your work. There's no secret. You got to be running your screens, whether we're in a correction or the market's going straight up. You want to be staying on top of it with a weekend routine, something where you're generating a watch list. But in MarketSmith, we try to make it a lot easier for you. So we have a proprietary report. It's basically a watch list called the Growth 250. Arusha will discuss it a little bit in here. It's coming up. But if you want to see, for example, the stocks that we're breaking out of bases today, you would just click on the Breaking Out Today folder. That's it. It's going to show you the stocks that we're breaking out of bases today.
Now, one cool thing about this Breaking Out Today, you can set alerts on it, and we're going to monitor it every minute. Okay, so you're going to get alerted right when that stock is breaking
and
out.
And that's email alerts as well, if you want them. If you want the email alerts, you have the flexibility of adding that as well.
So a stock is forming a proper base, and out of that proper base is breaking out, and I'm going to be alerted the minute it happens?
Yeah, exactly. Yeah, so you don't even necessarily be at your computer. And you can get on your phone and know that XYZ is breaking out at that point, so you can take action. Okay, so let's talk about breakaway gap. This is our latest feature that we released back in February. Now, as we all know, this market has been trickier, right? And so a lot of breakouts have had more trouble working. So what we've done, and the only breakouts that I've mainly been concentrating on are these breakaway gaps. And so what these breakaway gaps are, it's a stock that's breaking out while gapping up. And the reason why I love these types of breakouts is because they are powerful breakouts on huge volume. A lot of times they're after an earnings report. So there's that big catalyst, and all of a sudden there are more institutions coming into the stock. Now, ideally, you want to make sure this is the beginning of an uptrend, okay? You don't want to be buying a breakaway gap if the stock has already run like 2,000% at that point. So you want to keep that in mind, too.
Now, hold on. You're telling me I should be buying on a gap here because most gaps fill. Why would I be buying on a gap?
Jonathan, I asked myself, sadly, I asked myself that question in 2005. Okay, and so here's that example, Google. And here's Google, and I was trying to figure a way to get into this stock, and it reported earnings, and then it just jumped up like this, and it just kind of left everyone. And so what I told myself was, okay, I didn't realize this was a breakaway gap at this point. I just said, I just thought, you know what, it went up too far. It's probably going to pull back. I'll just wait for it to, fill the gap, pull back, and then I'll grab it at a lower price, right? It's a great, obviously they're putting up great numbers, but I need to get at a lower price. But unfortunately, that's where the breakaway gap is. I'm still waiting, for that gap to fill. And so this was my hard lesson, and I still lose sleep over this. Here's Google at $200, and I lose sleep over this because I didn't understand the power of a super stock. I did not understand that institutions were falling over themselves to grab as many shares as possible of Google because they knew that this was going to be the next game-changing stock. Now, some other benefits with the breakaway gaps. In a strong environment, breakaway gaps are going to have a higher probability of working. So, if you start to see a lot of breakaway gaps starting to fill, starting to fail, that's going to tell you that, hey, we might not be in a strong environment. Okay, so we like to use this list as a gauge on the market. That helps us, in addition, that gives us more information in addition to whether the market's in an uptrend or a downtrend. Now, the other thing that we really like about breakaway gaps, it can signify potential changes in industry group leadership. Now, I want you all to think back a quarter ago when Dollar General and Dollar Tree had breakaway gaps after earnings. That immediately told us that, hey, Wall Street is starting to place more money in the dollar stores. So let's go into a few examples here. So here's Google, 2013. So I have my chance at redemption right here, okay? So 8 years later, here's that breakaway gap. Now, unfortunately, it's not a $200 stock anymore. It's at $1,000 at this point. But just think about how much money is coming into the stock to move it up that much. It's up $122 in one day, 13.8%. Now, really, we're probably all going to be very quick to sell that stock immediately if we're up $122, right? Just take the money and run. But this is what happens with a breakaway gap. The next day, it just kind of holds. No one wants to sell. And the next day, it's just holding again. And then it just takes off. Okay, so this is how a super stock acts once institutions are falling over themselves. It went right up to that shaded area, that 20%, and really almost a straight shot up. This was as easy as they come in the stock market. Now, Tesla in 2013, now the cool thing about this, here's Tesla jumping out at $40, doing a breakaway gap. And now, look at this run right here, over 300% run at this point. So it was amazing. Now, to be honest, this was the earliest place out of all the tools we have that I saw Tesla.
Now, I'm a big fan of Leaderboard. As many of you know, I tour the country and teach people how to use Leaderboard. And Leaderboard caught Tesla coming out of a high tape flag at $100. That was the safest, most logical canceling point to buy it, and we made a decent chunk of change. But MarketSmith, because they have all these technical screens, had Tesla at $40. 60-point difference, a huge, huge advantage to have access to the whole database and have these preset screens run for you. You get the alert, you take action, you make a huge, huge gain because you knew about it early. The key and the theme here is early detection.
So here's Facebook, and quickly, the breakaway gap is relatively new, and Arusha was instrumental in bringing this to us, and one of the reasons was why, right? Because the gaps are occurring so often, we all sit around and say, what do we do with these? How do we figure out how to trade these? And maybe we ought to be alerting people to these more often. So here's Facebook. Most of you might remember. It's up 30% this day. Look at the volume percent change, 700% above normal. And it's just way out of this base and is very difficult to buy there psychologically in the mid-30s. If you advance, I'll tell you, for me personally, I have a hard time buying the breakaway gaps, and a lot of you probably should develop some kind of rules-based system or a checklist for breakaway gaps because they're just occurring so often nowadays with the earnings. But I like to wait one day, and I actually bought Facebook the second day because it was so quiet. I remember thinking up 30% one day, and the best it can go down the next day is 1.5%. And that was just kind of the trigger for me. Now, unfortunately, I don't own it still at that price. That would be awfully nice. But again, that's a whole nother story is how we handle the stocks. But being alerted to them is not going to be a problem.
Now, let's just go over some of the breakaway gap risks before you go all running out, buying gaps left and right tomorrow. You want to make sure you know what gap you're buying, okay? Because the bottom line is a lot of these gaps are going to fill quickly, okay? So if you don't have an exit strategy in place, you're asking yourself for trouble. So make sure you have that. We have webinars that talk about this. But the bottom line is a lot of these super stocks, they are going to have this type of action after an earnings report. And so you need to become familiar with it. Now, here's one example, Nation Star Mortgage back in 2013. And you see this breakaway gap. Volume is huge. Terrible base, by the way. But you know what? The fundamentals were there, the story was there, and so I decided to take a chance. I adjusted for that risk because the base wasn't great, but I said, let me take a chance because I know how to handle my risk at this time. So what I did was I just placed a stop below that day, and then if you jump out a few more days, I got stopped out. Okay, so, and that's the reality of trading, that you have to take some shots. You're going to get stopped out of a number of them, but if you're managing a risk, that's okay.
All right, we saw a lot of classical examples. Let's show a couple of recent examples of names people may not have on their radar, but had big pops.
Yeah, so this is what's cool about the breakaway gap list. It's a pure technical screen. Okay, so here's quad graphics, and how many of you out there, have heard about this company? Okay, see, I don't see any hands raised.
We saw a couple hands raised.
Oh, did you see some hands? I don't see
electronic hands.
Okay, electronic hands. Okay. But here's quad graphics. There's a huge breakaway gap, and this came through our list in May, and you got the alerts, and look at that run it went on. Okay, now the bottom line is that a lot of these super stocks, the fundamentals, they aren't great right there, but it's a turnaround story. Okay, and 25% of super stocks, they're going to be turnaround stories. Now, Randgold, breakaway gap, here's a little bit more recent example. Scott, you've been all over the mining stocks, right? This one is just ridiculous. Breakaway gap, 28% in 8 days. And then a more classic CanSlim example right here. Here's Ulta after reporting earnings back in March. Breakaway gap, and it just keeps working and never really pulls back. And now it's up 29% in 79 days. Now, first I want to thank everyone who's taken a break to watch the webinar, taking a break from Pokemon Go, because I know we're all playing it here. Jonathan's been running around the parking lot the whole day. Did you know that, in addition to Pokemon Go being this big hit, Nintendo actually had a breakaway gap back on July 8th. It came through our list, okay? Because it's a pure technical screen, and it alerted us that, hey, Nintendo is doing that type of action. Institutions are starting to like it, okay? And now this one, obviously, is probably one of the most ridiculous ones. Now, if you want an example of institutions falling over themselves, here's your example. They don't care what price it's at right now. Get me more Nintendo. Get me more Nintendo. And you get this kind of reaction where it's up 93% in 7 days.
And as a MarketSmith subscriber, you knew the first day you got an email and alert. You heard about the craze, but the stock behind it had a lot of power and a lot of money's being made, and you knew early. Early detection is the key.
And Jonathan, I didn't even know that Nintendo traded on the U.S. exchange that you could buy it. I knew it traded in Japan, obviously, but you would have got this alert. Oh man, I can actually buy Nintendo on my U.S. stock account if I want. So let's get into relative strength, right? This is our bread and butter, relative strength from our database. And there's two ways we measure relative strength. Most of you are familiar with the rating, right? 0 to 99, 99 being the best. And it's just going to help you separate leaders from laggards. Real simple. Right on the chart, the RS rating is 90. I know that stock is outperforming 90% of the other stocks. Now, our blue dot is measuring the relative strength line. tiny bit different. The relative strength line is versus the S&P 500, the index. So you're looking for the shape or where that relative strength line is based on its history. In this example, you can see the blue dot, RS line is in new high ground. And here's Yandex. So the stock comes out of this cup with handle, and the relative strength line is making new high, the blue dot, right? The stock is stronger than the market, and that's what you want. When you're buying individual equities, you want to have those stocks stronger than the overall market. Otherwise, you just buy the indexes, right? So you want to be able to see that relative strength line confirming the strength in the stock. Here's the weekly chart. Right, you're getting confirmation again. You got the daily and the weekly. The relative strength line in new high ground as the stock emerges from a base. And this was, I wish they were all this slow, right? 38% in 15 weeks, right? Here's Solar City, another new name at the time, might not known about. But if you're watching the pattern and you're getting that relative strength, you're getting confirmation. The stock is stronger than the market. There's the blue dot. As the stock emerges from the base, let's go to the weekly chart, and you see that was a really big move as it emerged from the base, up 100% plus in 8 weeks.
Here's one of those hindsight stocks. Everyone knows that solar had a beautiful run. We knew that it was coming, and this is one of the earlier ones. And how do you know it was going to be a winner? You didn't necessarily know the industry was going to have a big move, but the blue dot said, look at me, I'm outperforming the market, pay attention, and you could get these gains early.
There's 3D systems. That's very subtle. You can see the S&P across the top of the chart. That's a correction. Well, what's 3D systems doing while the market's correcting? Well, before this day, it's going sideways, which is powerful. But on this day, as the market's going down, the stock is breaking out of a base. All right? How do you find the idea? Well, relative strength line, new high. Here's your confirmation, the blue dot. Stock emerging from a base with the RS line making a new high ground. And you can see it here on the weekly as well, more confirmation. And then the amazing thing is, all right, so the market's correcting, the stock breaks out, then all of a sudden the market gets better, and what happens, right? They really start to rush into those stocks they were trying to buy on the quiet while the market was correcting, right? The institutions were trying to do that, but the price action was just screaming that something powerful is going on here, 82% in 20 weeks.
All right, MarketSmith has a lot of powerful analytical tools. We only have about an hour today. There's no way we can cover them all. So what we did, we picked out 2 of the strongest ones, and the guys will give you a quick tour.
So the 2 that we're going to cover are the weekly charts and the Growth 250. So Scott, you want to take over the weekly chart?
Yeah, and the weekly chart is really what separates us from everybody else, right? That nobody has a monopoly on a chart with price and volume, right? But this chart with those fundamentals is just golden. Where can you go to basically have everything you need to make a decision on a stock, to make an intelligent, sound decision without a chart like this? I mean, it's got the price action, which I want, and now I've got the fundamentals, so I can combine the 2. I don't have to go to 100 websites. I don't have to go to sec.gov. Does that sound fun, Jonathan?
Absolutely.
Yeah, I mean, you don't have to have a CFA or a CPA, right? I can just quickly see that our analyst team has scrubbed the data, and the earnings last quarter were up 83%, and somebody like myself who's not very sharp knows that's pretty good.
Yeah, I mean, Jonathan's busy with Pokemon Go, so he doesn't have time to go through that.
There's a lot on this chart. Briefly walk us through what's critical on this chart.
So obviously you have the price action with the relative strength line. You've got the S&P across the top. And this is a weekly chart, so each price bar is measuring Monday through Friday's price action as well as the volume that week. One of the big questions we get a lot, what are the circles? It's measuring insider buying or selling. That's what that's doing. Now, our fundamental data block, this is very important. You really want to get comfortable with this, right? So you've got our annual earnings and then the estimate. So in 2016, what's the estimate? In 2017, what do the analysts think the company will do going forward? Top RS and group, very important, right? Most stocks move in herds. So I want to see if I'm considering Facebook in this instance, are there other stocks that are performing well? That's going to show it to you right there on the chart. are proprietary ratings, all right? So everything that we've built through 50 years of stock market research that Bill has worked on, from EPS rating to the composite rating, are in this block right there. And then other key growth ratings, right? So the 5-year growth rate, the PE ratio. And this is what's really neat about this. I don't use the PE ratio. I don't know or look at what that means for each stock that I own, but that might be important to your analysis. It's available to you for easy decision making. And then sponsorship, right? Very easily. I can see that number is increasing. The number of mutual funds are increasing. The number of funds taking position in Facebook in this instance has increased from quarter to quarter to quarter. And then last but not least, obviously, is earnings and sales. This is very important. On the weekly chart, you're going to get 6 quarters of earnings and sales with the most recent quarter across the bottom.
So it's essentially one-stop shopping, as Scott was telling us. Everything you could need to make an intelligent decision about a company is on the weekly chart. One chart and you're done.
So let's go into the Growth 250. Now, the Growth 250 is a really cool product. It was designed by the O'Neill portfolio managers back in 2010, and it comprised of 30 proprietary stock screens. Okay, now what's really cool about this is that a lot of the criteria that's being used in these screens is not even available in MarketSmith. Okay, it's available in our institutional platform. Okay, so the product that the institutions actually subscribe to find their ideas, they're run there. The screens are run there, and the results are placed in a MarketSmith every Friday night. So now, over the last 5 years, this is the first place I go to, because I always find my ideas earlier than any other source, even my own personal screens. And so this is where I'm going to go to get not only the ideas, but also get a gauge on the market.
So the Growth 250 is there's two things about it. It's a giant watch list, right? So there's 7,000 stocks and or ETFs in our database, and that can be a daunting task on the weekend. You think, gosh, where am I going to find the time to look at that? So the Growth 250, this is the first thing I look at, right? So they take it down. It's called the Growth 250, but it's a moving target. We'll allow it to expand and contract based on the market, roughly 250 ideas. And so now, if I've done my work of going through the Growth 250, I've pretty much done about 70–80% of the work that I want. And if something comes up and I can't get to the rest, I've done a pretty good job of filtering that database. It's a great time saver. If time is an issue with a lot of us, right?
Oh, absolutely. Now, what's cool about the Growth 250, we're taking that O'Neill database, which is institutional quality. So we're already removing a lot of the stuff just in the database. And then we're applying 30 different screens, distinct screens that were designed by those portfolio managers. And finally, we're getting that Growth 250 every weekend. So now we have our watch list to study over the weekend. We can go through it pretty quickly.
And Arusha, what you mentioned is very important. I want to go over it or emphasize it, is that database, okay? So what we refer to as institutional quality, there's probably 20,000 stocks out there, right? So we don't want all those stocks in our screens or in our database, because it's going to water down our proprietary ratings, right? The earnings per share rating, the composite rating. And so we want to filter that down with the guys upstairs, the analysts, and they're going to change that to roughly what I said, 7,000 stocks or ETFs, and we're filtering it all the way down to a much more manageable list for everyone.
Now, the other thing that we've done here, and we showed a screenshot of this before, but we've taken our pattern recognition algorithm and we apply it to the Growth 250. So we take these stocks that have gone through 30 screens, they have this tremendous potential, and now we're using our proprietary pattern recognition to break it down into those smaller lists, okay? So that near pivot list. Here's a screenshot from July 19th, okay? Take a look. There's Facebook right there. Facebook just recently broke out, right? It was in a near pivot list just yesterday. And so it's going to tell you that, when you start getting those alerts on that breaking out today, that a so-and-so stock is breaking out, then you're at least getting an idea. Now, look at number 11. Ligand Pharmaceuticals. That just broke out today.
Yeah,
we got that alert.
Breakout.
Right. Yeah. So we got that alert.
That stock was on your watch list yesterday.
Right.
And that's the key. Look, we want to. We're not trying to buy them early. we want to be aware of them early, and that's where this research is going to come in.
Yeah, and now the key is that we're trying to make this easier for ourselves to capture these super stocks. And so we're doing this, we're using these tools, and we keep improving it to just make our lives a lot easier too.
All right, we're running low on time, but I do want you guys to talk about some of the new enhancements that are coming out because they're very exciting.
Yeah, so now throughout the presentation, we showed in some of these super stocks these massive earning gaps. Okay, so this is one thing that we're going to make it easier for all of us to capture now, to become more aware of. These stocks that are gapping up as a result of an earnings release, okay? So this is a fundamental catalyst. Wall Street now starting to realize that maybe they don't have enough shares if it's to the positive side. But we're going to give you the earnings gap up and the gap down. Okay, so this is a little bit different than a breakaway gap because you don't necessarily need a pattern for it to appear on this list. So let's go to some examples here. Here's NVIDIA. You can see that first earnings gap back when it got back above 30, it gave you a heads up that maybe it's going to complete a base. Okay, so it got on your radar a little bit earlier. Then finally it reports another earnings gap and really accelerates. Now here's Skechers, probably the best stock of 2015. Had a number of earnings gaps. So it will start coming through these lists now to give you a heads up that, hey, institutions are really starting to like this stock. Now to make things even easier, we're going to put the earnings report, when they reported earnings, right on the chart with a little arrow and the quarterly percentage change. Now if you hover your mouse over that quarterly percentage change, that little box is going to appear and give you all this new information to make it easier.
This is really cool. A lot of people have been asking for this, right? Because before you have to go into the calendar and you have to find the date and go back, and now I can easily see right there on the chart, oh, okay, what did Facebook do on earnings last quarter or the quarter before that?
And everything's just to make our lives easier, absolutely. And then also for the breakaway gaps, if you hover your mouse over it and it's a breakaway gap, we're going to tell you whether it is. Now, to keep you up to date on when companies are reporting earnings, we're going to give you the top 20 based on market cap every week in an email. Just let you know, hey, all these stocks are coming up. You'll have the full list within the MarketSmith tool, though. And then finally, you can set emails up to get stocks that are gapping up and gapping down every day, just to keep you heads up if you can't watch the market.
We didn't say when. When's this stuff coming?
It is coming hopefully mid-August. That's the target date right now.
We're right in the middle of earnings season. This would be a huge, huge benefit and a huge upgrade. So let's talk about support. Obviously, we barely scratched the surface of what MarketSmith can do. How can people get support? How can people get education?
Well, we have the ongoing education. We have webinars that we do every week, and we have the Becoming a MarketSmith book and also the MarketSmith University. Okay, so we have all this tremendous support. So what we did with the MarketSmith University is come up with a lesson plan that's really based on the How to Make Money in Stocks book and CanSlim. And we use MarketSmith to illustrate those concepts, okay, to make it a lot easier to get up to speed and to really analyze stocks better. And so you can go through that, and then, Scott, we've been doing webinars for over 5 years now. Yeah. We have a ridiculous catalog covering a number of different topics. And so you can always go through that list. We record all of these webinars. You don't have to watch them live. You can always go back and study and really get better at trading.
The other thing we offer is, product coaching, right? So there's a handful of us here, and when I say we use the tool, we use the tool. So one of my colleagues says MarketSmith can be as complex as you want, if you want to customize screens, or as easy if you want. Just don't pull up the charts. There's probably a sweet spot somewhere in between. So follow up with us. We'll show you how to use it. We'll customize it for you. What type of stocks do you want to look for? And that's what the appointments are for, the coaching is for. Review the features, how to set price alerts, something we didn't talk about, for time's sake, but that's really neat, where you can get price alerts, whether it's in MarketSmith or an email. I mentioned custom screens. I really like building custom screens. And then obviously technical support. If you're having issues configuring it, getting it up, we always have access to that.
So if you want to take advantage of MarketSmith, we do have a very special offer. Today you can get 4 weeks, a full month of MarketSmith for $29.95. A very special offer. What I recommend is, if you're going to take advantage of the offer, go to the website, investors.com/MS4weeks. That's investors.com/MS4weeks for 4 weeks of this powerful tool for only $29.95. And the first thing I would do is schedule an appointment with one of our coaches. You have 2 of them on the phone. You've heard how much they use the product, how intelligent they are about the product, how much they can help you. We're here to help. We're here to show you all the tools and all the power behind MarketSmith. So if you have any questions or want to take advantage of the offer, please go to the website, and then please schedule an offer to talk to one of our coaches to get the maximum value. I don't think we have time for a lot of questions. We're already 7 minutes over. So if you have questions, please give us a call at MarketSmith or send us an email. And any closing thoughts, gentlemen?
No, I just want to thank everyone for joining us today. As mentioned before, Scott and I were customers before, okay? We believe in this product. We believe in the mission. It really has changed our lives. And so I encourage all of you to take advantage of this offer, and put some time in, leverage our expertise, so we can, help you all to really take control of your investment life.
Outstanding. Thank you for your time, and good luck, everyone. Happy investing.